I am currently beating a Forex robot on a prop firm challenge using this very simple scalping strategy, which so far has given me 100% win rate on my challenge and has also got me over halfway to passing phase 1 of a 5k funded next prop firm challenge. I'm going to share this complete strategy with you. I'm also going to give you some extra steps to make sure that you don't take bad trades. So make sure you stay to the end of the video so you don't miss any of the key information. So without further ado, let's get into it. And for this strategy, we will be using 2 time frames. So on TradingView here, I just used a layout of the split screen view, and that way I can see 2 different time frames on one screen. It's just a lot easier than having to switch back and forth from different time frames. On the left here is the hourly chart, and on the right is the 5-minute. And the strategy is as simple as this. We're looking at how the previous hourly candle closed, and from there we are deciding if we are buying or if we are selling. So if the previous hourly candle has closed bullish, we will be looking for a buy position. If the previous hourly candle has closed bearish, you know what I'm going to say. So here's an example that happened just last night. AUD USD here, you can see from 3 till 4, the hourly candle has closed bullish. So at 3 a.m. UK time, you can see the price opened here, pushed up, and then closed here. So the whole theory behind the strategy is if one candle has closed bullish or bearish, then why can't the second one continue in the same direction? So once we've got a candle close on the hourly chart, when the new hourly candle opens, we'll move over to the 5-minute to look for our entries. Now there is a couple of different entry models to get into a trade. Me personally, I like to see a break of a high if I'm looking to buy, or a break of a low if I'm looking to sell. So this one here, for instance, 3 till 4 has closed bullish. So when the 4 till 5 candle opens, the new hourly candle, I will be looking on the 5-minute chart for a entry. So you can see here, this is when the new hourly candle opens. See that there on the 5-minute, and you can see how price moves over to the new hourly candle, which opens at 4. So I will put a buy stop above this previous high. So you can see here at 355, just before the new hourly candle opened, price did make its highest point. So when the new hourly candle opens, I will set a buy stop order, something like this, looking for price to continue upwards and break this high, and then set a target of 1 to 2, 1 to 3, whatever it may be. And that is how straightforward the strategy is. Obviously, there's a couple of nuances which we'll get into later in the video, but ultimately, price has pushed up during the 3 till 4 hourly candle for an hour, clearly showing that Aussie dollar is stronger than US dollar. So if price is pushed up for an hour, why can't it continue upwards? Here is a sell example, again on the same pair. So if we look here at 7 p.m, you can see that we have had a bearish candle close. As well as that, price is pushing into an area that it has rejected from previously. If we go back a few hours, price has come up to here and rejected. However, we won't get into that just yet. For now, let's just focus on the fact that price has closed bearish. Why can't it continue downward? So after we've had this bearish candle, at 8 p.m, you would be looking for a break of a low, because obviously we are selling this time. So you see here, this is the previous low. So at 1955, price came down to here. So when the new candle opens, we'll put a sell stop order below this level. Stop loss goes above the previous high, because obviously we are selling. And you can see pretty much immediately, as soon as the new hourly candle opens, so the 8 till 9 candle, price came down, broke this previous low, and then continued downwards. If you are going for a 1 to 2, you would have been sat in that for a while, but we would have got there eventually. And then another example is here immediately. So after the 8 till 9 candle closes bearish, we could be looking for a sell position immediately after that candle. So the 9 till 10. And this is exactly what it would have looked like. You can see there at 2055, we made a low. As soon as the new hourly candle opened, sell stop would have been below this area. Stop loss above this high, and then again, whatever your target may be. Now, again, for me, I like to see the break of a high or a low to enter a trade. However, if you would like to trade a little bit more aggressively, then once you've had the previous hourly candle, so this determined your bias, then you can just be looking for any candles in your direction. This one, for instance, the buy that we went over earlier, I've now realized that's even better buy, because you can see that price has finally broken above this area. So this area where we were taking sells from earlier, price has finally broken through. So after that, it's clearly showing that Aussie dollar is strong. We've broken through an area of rejection. There's a good chance that price may continue upwards. Now, in terms of entries, what I would have done here when the 4 a.m. candle opened, as soon as I would have saw this, I would have had a buy stop order here, meaning that if price breaks that high, I will be triggered into the trade. However, if you were a little bit more aggressive, you could have entered here. So the Bias is that you are buying this pair because of how the previous hourly candle has closed. So if you firmly believe that price is going to go up, then there's no reason why you couldn't have bought immediately after this bullish candle, because this is clearly showing that there is bullish momentum still within this pair. So you could have actually got in after this bullish candle here, even though we haven't yet broken above this previous high. Now, if you were really scalping this, you could have actually got in even earlier on this candle if you want to. So again, if the previous hourly candle has closed bullish and your bias is that we are definitely buying Aussie dollar at this point, once the new hourly candle has opened, then once you see this wick rejection here, so at 4 a.m. price initially tried to push down but rejected, you could actually trade off wick rejection. So if you're happy that price has made its lowest point, it isn't going to continue downwards, then you could have actually entered the trade once you've seen this wick rejection. Now that would have been a 2-pip stop and you would have actually got a 1 to 11 on that one. So it just shows the power of believing if price is going to go up because of the previous hourly candle or down, and that is literally how straightforward this strategy is. Now obviously this doesn't happen all of the time, because obviously what happens with price is if it pushes a long way into one direction, at some point it is going to exhaust. So you can see here from midnight tonight, Aussie dollar pushed for 5 hours. Now if you were to get to the chart after the 5th hourly candle in one direction, how sure are you that price may continue that way? Or is it going to get to a point where it exhausts maybe just a little bit before continuing upwards? But you do have to just be wary of entering a trade when price is pushed into one direction for so long. So after the 4 till 5 hourly candle, that is when price finally exhausted and then did come down. Now there are some ways to take advantage of this. Because price has pushed so long in one direction, like I say, it is likely to come down at some point. So once you've seen price push in one direction, when the new hourly candle opens and you start seeing some bearish momentum because price may be reversing, you could potentially be looking for a break of a low to actually sell that pair. However, we're not going to get into reversals in this video. This is just a continuation of one direction. Now, another thing to consider, this is the area that I drew out earlier. I drew this out because you can see price has pushed into this area, rejected and come down. So when price comes back up, yes, we've had a bullish candle, but we wouldn't necessarily be looking to buy here because price is just pushing into an area of rejection. So for instance, once the 6 till 7 candle has closed, we have closed bullish, we wouldn't be looking to buy. Price is only pushing into this area, so the likelihood of it pushing through are lower than if there's no traffic for price to push into. And you can see that's exactly what happened. Price stalled and then broke this low and then continued downwards. So what we'd be looking for are areas like this. So you can see where there is no rejection here until I'd say this level. So we're still on Aussie dollar, but once price is rejected from here, we could be looking to sell because there are no wick rejections here on the hourly chart. So there are no key areas of rejection. So there's no reason why price may reverse from here. Obviously it can, price can do whatever it wants. And sometimes it does things that just does not make sense at all. But what you'll find is price likes to go round and create gaps. So this is clearly an area of support. Price is pushed into here and bounced previously. So with these hourly candles, we can be selling after them because we're nowhere near this level yet. When we get to this level, you can see price tapped into it again and used it as support and then pushed up. So unless price is pushing into an area of rejection, you're good to take the buy or sell if there has been an hourly candle close in one direction. Now, in terms of the hourly candles, there's a couple of things to bear in mind as well. One of them is the size of the wicks that the candle has left behind. So this is another example here on AUD USD. This area where price has pushed into, you can see we've got a huge bottom wick rejection here. So even though this candle has closed bearish, it's got a massive bottom wick rejection where prices tried to push down, failed, and then closed back up here. So if prices tried to push down and buyers have pushed it back up, what is the reason for that? And is there a reason why you should be selling if buyers are clearly in control and pushing the price back up? Obviously, we know this is an area of rejection and that is why people are buying here. So even though we've had a bearish candle close, the likelihood of it continuing downwards are much lower because we are in an area of rejection and we've got that bottom wick. That's why I tend to look for candles that do not have a top or bottom wick, or if they do, they're very small. So this candle, for instance, is an absolutely beautiful candle to continue to sell off because we've got a slight top wick rejection, a slight bottom, but we've got a nice bearish candle where sellers have clearly been pushing price downwards for an hour. So that's just one thing to consider when looking at the hourly candles. Another thing to consider is the size of them. So this one, for instance, is a really nice bearish candle. But then if you look at this bullish candle, you can see that it's maybe twice the size of this bearish candle. Now, what's the reason for that? Potentially there's been some news during that hourly candle, and basically if price has just pushed massively during 1 hour, again, we're not looking to get into a trade, because has price already made that move and potentially we've missed the boat. It's just like if price is going into one direction for multiple candles, price has made that move, so potentially we're not looking to try and get on board when the ship has already sailed. That worked. That really worked so well. So this is a huge bullish candle, and you can see that price didn't continue upwards. Everyone has already bought this position, whereas this bullish candle here, which is half the size, you can see once it closed that price did continue upwards. So these are the sized candles that I'm looking for. These candles, either bullish or bearish, in an area no way near any areas of rejection, and I'm just looking to take advantage of that continuation. Now, what I tend to do as well, just to hopefully make the trade more likely to hit take profit, is I am looking at different pairs for confluence. So for instance, this buy position that we had on AUD USD, after the 3 till 4 candle has closed bullish, what I would look at is okay, is Aussie dollar strong or is US dollar weak, or both? So the way I do that is I'll go over to AUD CAD, because obviously again that's another Aussie pair, and I would look at how that candle has closed as well. So you can see that that 3 till 4 candle has also closed bullish. If we look at AUD JPY, 3 till 4 has also closed bullish, which just shows that there's clearly some strength in the Aussie dollar. The fact that it has closed bullish against 3 different currencies shows that the Aussie dollar is clearly strong. So from a price action perspective, you could just look at Aussie dollar USD and say, okay, this is closed bullish, I'm expecting price to continue upwards. However, to try and increase my win rate personally, I look at confluence in pairs. I like to look at other Aussie dollar pairs to see how they're getting on, because if we have a bullish close here on Aussie dollar USD, however on Aussie dollar CAD and Aussie dollar JPY, the Aussie dollar is going down, then potentially Aussie dollar isn't as strong as we'd like, therefore making it less likely to continue upwards. So I like to see the currency that we are trading pushing in one direction against multiple different pairs for me to take a trade. And that is it. That's the whole strategy. Hopefully everything I've said has made sense. Like I say, I am a beginner trader and I have never actually passed a prop firm challenge. This is my first manual prop firm challenge that I've ever tried. So do bear that in mind if you are looking to use this strategy yourself. Obviously we've got 100% win rate now, but I'm not expecting that to continue. I will lose a trade at some point. I will lose multiple trades, but hopefully we can still pass the challenge. Really hope you enjoyed the video. If you have any questions at all, please let me know in the comments. And thanks very much for watching.